keeping you company this.
In fact, we're going to chat to Dr. Qureshi Suleiman, not quite now, but just coming up shortly. Looking forward to that conversation regarding the impact of Ramadan on the broader South African community. Absolutely looking forward to that. But what about the impact of the economy on yourself? You'd be very, very worried about that with inflation going up once again, and what that really means, I don't know. We're going to find out more with 27.4, as per the 27.4 financial markets update. So with me is the head of investment strategy at 27.4, and that's Orin Tambo. Orin, appreciate your time, and good morning.
Good morning. Thanks for having me.
Thank you. So I've touched on inflation going up, disappointingly so, I would think, but maybe there's a good reason why it's going up. Perhaps link that to this first point about consumer confidence now slumping to its lowest in almost a year. I mean, what does that mean?
Yes, so I think yes, you've touched on the core of what really caused the drop in the consumer confidence index. So basically, what that index tries to do is to gauge the confidence among consumers. So it's usually derived through a survey. So they ask a couple of questions in terms of how consumers are feeling about the economy, whether they're willing to procure durable goods, how do they think about their balance sheet. And I think what has come out from this particular reading is that consumers are concerned a lot, and we've seen it happening. So if you look at the index, it has been in the negative territory since 2019, which is quite consistent with what's happening in South Africa. We've got a lot of consumers coming under pressure. So this time around, though, we have load shedding really causing a lot of worry among consumers. They're trying to think about the impact of that on the economy, and the inflation number as well.
And quick question: when we say consumer confidence as per the index is at its lowest in years, right? How does that translate? In terms of daily life. Let me rephrase it. If we say a football team is not going to play without a striker, what it translates to is like they're not going to score goals. Okay, so what does this translate in daily life?
Yeah, so I think what the index is basically telling us is that consumers are under pressure. They are concerned about the cost of living. We have seen, the CPI essentially being above average for the past 1.5 years, printing it around 7%. So for instance, if you look at the inflation number that came out a few days ago, it indicated that the food component, which is one of the biggest aspect within the consumer index, is the one which drove the inflation. So we've got a lot of citizens that are struggling to meet their daily needs. In terms of food, in terms of shelter, in terms of a lot of other things. So if you want to now translate that into what that means, the broader economy, obviously consumer spend is one of the biggest driver of the economy. So should we expect that to have some sort of negative, knock-on effects on the overall economy?
And you wanted to comment about that as well, right? So the deepening power of cost of living crisis and what that really means. Tell me about that.
So generally, I think what has been happening is that post the COVID-19, we saw prices skyrocketing across the world. It's not just in South Africa, but it's across the world. The key drivers that have been driving that has been, energy has been one of the biggest drivers. So we saw oil prices, breaching $100 per barrel, something that rarely happens in the history of the price of oil. So that really contributed a lot to the increase in the price of petrol for consumers on a day-to-day basis. Then we saw food prices as well, going up, which I've mentioned. And within the food basket, it has been a combination of the exchange rate, our rand being weak, as well as the fact that there have been shortages with emanating from the Russian-Ukraine conflict. Those with, Ukraine particularly was one of the biggest suppliers of food products to the rest of the world. So what that means is usually, you would expect that if the prices are going up, then you expect the wages to also pick up. But what we've seen in this particular round of inflation is the fact that, particularly in South Africa, the wages have not been able to keep pace with the increase in consumer prices, which means that consumers at the end of the day, their salaries, the power of their salaries is diminishing on a monthly basis.
Which in fact means people can't breathe. They need oxygen in terms of living their lives. They just can't. Absolutely. You have a thought on the Federal Reserve raising its policy rate by 0.25 percentage point? That would not be South Africa, right? What does that mean?
Yeah. Yeah, so it's not in South Africa, but it definitely has an implication in terms of the global economy. So we believe we're watching it very keenly. I have to wait for the statement to be announced. I think a lot of investors were, because it was probably, in our view, one of the most difficult meeting for the Fed. Just for the listeners in terms of the background. So the Fed started hiking interest rates, sometime last year in January. They started increasing by 25 basis points. Then they, stepped up to 50 basis points, to 75 basis points, and they came down to 50 basis points. And what we've seen more recently is that the Fed is slowed down to 25 basis points. But what was really unique with this particular meeting is the fact that all along, the Fed was concerned about inflation, which we're talking about. So in the US, there was a time when inflation was about 9.1%. And they have really worked hard so that inflation number has come down to 6.4%. But this time around, the meeting came on the backdrop of the collapse of some of the banks in the US. So 2 banks in the US collapsed, and they collapsed particularly because of the rapid hiking of interest rates. So I think the market was trying to gauge how the Fed is going to balance the 2 things, inflation and financial stability. But at the end of the day, I think what happened is that the Fed said, no, we're not worried about financial stability. Our biggest enemy at the moment is inflation. We're going to continue hiking. And the response from the market, obviously, I think the market was expecting that as much as they're going to hike, probably it's going to be the last one. But it doesn't seem to be the last one. We're probably going to have 1 or 2 further hikes, in the coming meetings.
Well, let's leave it at that. I mean, I know when you spoke about the banks collapsing, the reference to Credit Suisse and concerns again about another global meltdown. Hopefully that's not going to happen. We absolutely don't need that. Thank you for your time, Orin. I gather we're going to be chatting quite often through this month of Ramadan, so looking forward to that. And I'll tell you what, you don't have to answer this. I'm going to ask this question to the audience here to say, we're speaking to Orin Tambo from 27/4. Often when we talk about companies, they work hard. They work 24/7. So why is 27/4 called 27/4 and not 24/7? I know the answer. I'll see if the audience knows it. Thanks for your time.
Thanks, Ashraf.
Appreciate it. There we are. 27/4. Do you know why 27/4 is called 27/4 and not 24/7, which is what most people who work really hard tend to be calling themselves? Well, if you have a thought on that, you can WhatsApp us as always, and give me your thoughts on that, or even comment on the back of the various social media platforms. The WhatsApp, voice notes or text is 061 766 0355. 061 766 0355. We'll chat to Qureisha Suleiman right after this.